The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a really good Thursday morning. And there's not a market in the world that wasn't up over 1% yesterday. It's amazing. Everybody's happy again. No problems. 1,000 points of light. Not going to do it. To quote George Bush Sr., as exemplified by Dana Carvey. No chart. We're going to try to get this back here. So what we're looking at here initially is the S&Ps, right? So we had talked about a range on Tuesday, 2045, 2063. Not a lot of cohesiveness in the breadths that we look at. And I want to pull that up just to let you guys know what the breadth actually is right now as of the close yesterday. So a lot of these stocks haven't opened, don't have any direction yet. The breadths have just definitely got on the same side of the fence here. But Tuesday we were so mixed up. We talked about a range, 2045, 2063. Then yesterday we talked about, only time you could buy or get some conviction about this market being the S&Ps is to get outside of 2063 on the top or get below 2045 on the bottom and keep your eye on the breadth, right? So, and when I say breadth, it's not just the number of stocks up or down for the day. We're talking about breadth relative to our profiles. So right now, that 2063, let me just kind of show you, there you go. There's the 63, which is the former daily unfair lows, and then the current 240 unfair highs. And when we got through there, it was just a lot of folks had to start covering once we got out of that little DMZ, as I like to call them. So now trading's trading. Can't put too much thought into this. We've just got to trade the technicals here. This is our long-term, weekly. This is our daily. This is our kind of intermediate term. And I think most recent highs on this market around 2020, somewhere in that neighborhood. But right now, we are getting into, and we talked about this with Dave the other day from, I think Dave's in Florida. What we talked about was, how do you read these breaths? How do you use them to your advantage? We talked about longer term inflection points, kind of, they run the show for the most part. Then they take precedence as you go down the line. Short-term guys got to, definitely keep your eye on the 60-minute and 240-minute breath. But no matter what's happening with the breath, we've got to pay attention to these inflection points. 2088.95. Let's just call it 2089. So we've busted through that DMZ and we've come up into some resistance here. All right. I want to show this. This is our daily profiles, and we have completely exploded and run through the fair auction after it was emitted yesterday. That orange bar, new profile attempting to appear, locked in. Now what do we do? So right now, in my opinion, you do not go long. We're at a major inflection point. Should we go short? You've got some things that are, sitting here, positive breath on both the long term and the intermediate term, the 240s and 60s. Is it time to do a little bit of a ricochet trade against this daily unfair high? I'm not opposed to it. We've gone a long ways in a short amount of time. You can put some stops easily above 2089 based on your appetite for risk. There's not a lot of concert going on with the breaths right now, but you've got some hints here on the short term. 2083, as you can see, that's being used as very, very short-term support. I hate to even talk about this type of time frame, but if we can start breaking, since we started ramping up around 2045 and just not really looking back on this most recent ramp up past that DMZ, We have had no breakage of even short-term profiles, and 2083 might give you some way to look at this as, okay, it might be time to do a contra trade with some kind of confirmation as we have come off this 2088. Do I think that's a high probability trade right now? No, but it is an opportunity on the short term. We still see my chart. I'm just making sure. So to sum up the S&Ps, this is the picture. And we do not have any bearing yet on what's happening with our breadth, and the market is actually, how many S&Ps? We're up about 4. I think we're up about 7 or 8 earlier, maybe 9. So that's the deal on the S&P. So let's do this. Let's look at the dollar, because the dollar, is kind of running the show. We talked about this not going in a straight line up to 128.29. This is the situation on the dollar. This is our long-term profile. That's our goal. That's our target. We got very close yesterday, 99.97. And you got to look at these on a relative scale. I mean, the profile height is 96 up into 100. So that's what, 400 pips. Let's just round it off. So when we talk about getting in the neighborhood, this showed top yesterday on our scanner. Okay, why? Because it was in a 10% variance of the height of the box within those outside envelopes. Can you say this was met and achieved with that noise factor put in place? Yeah, I mean, when you get in these close to these inflection points, especially when they're very wide, as you can see, what do they say? What's that saying? Hogs get slaughtered, or somebody can maybe type it in the den. You got to be willing to look at that as somewhat of a gift. We have ramped up very quickly in the dollar, so that could have been looked at as targets being reached. But here's our daily on the U.S. dollar. It looks like we're gonna have a new profile maybe appear tomorrow. I hope that edges up. That's going to give you higher support areas. Do you have to take this long trade off? If you guys are playing it in the long term, 98, 44, 45, you got to put stops below there for a while if we pull back that hard. But I still think we're going to lurch past 100 on this particular product, just because ultimately that's what markets want to do. That 100 is a big psychological barrier, and in my opinion, it will surpass it. Pigs get slaughtered. Hogs get slaughtered. What's the first part of that? I can't remember. Something gets something, but pigs get slaughtered. Fish get eaten and pigs get slaughtered. No, that's not right. It's early. I haven't had the proper dose of coffee. Let's take a look at the DAX. Man, what a week. What a week for this thing. That is a range. What is that? God bless. That's like 6 or 7% so far this week. That's crazy. Man, doing the math, that's incredible. So, what do you do with the DAX? Let's just kind of keep drilling down. We're kind of in no man's land up here. With the U.S. sitting at a little bit of a resistance situation, the DAX this is our 60-minute. And again, this thing's so volatile. We're going to keep drilling down in time frames. The only thing I see, literally, is around that whole number, 11,000 down into 10,950. That area is going to be support for this thing now. We may kind of come back and retest that. So guys who are trading the DAX, I mean, you've got to put in monetary stops above, but we may relax down into that 11,000 down into 10,950. That would be your targets, but you gotta watch out. This thing could get away from you, especially if the S&Ps get back above 2089 and start going north again. So I think obviously the S&Ps have kind of run the show here a little bit, and the DAX and Europe is looking for leadership from Obama. No. I'm going to give up my night job as a comedian pretty soon. Here we go. Let's take a look at the treasuries. JB, I like that. This is kind of interesting. We talked about this 26, 17, 18, and the 27, 11 into 19 up top. This is actually looking kind of attractive as a long now on a contra trade basis. And why? Stock market going straight up. These things are kind of just sitting here, not wanting to go down in that inverse relationship. Historically, that's normally the case. That to me gives you a really good insight, trading the 10-year, that you could put some stops down here. Let's just call it, 126.10, 126.09, and you got a good risk reward here. I mean, your ultimate targets up top are 127.11 into 127.19. That DMZ up there. This is a nice little trade setting up here on a relative basis. Gold. Talked about this with Tom yesterday afternoon on his show. Not showing any signs at all of being any type of bottom right here. This was the big number, 86 into 89.90. Why? There's those two numbers. They're all in the scanner. The scanner's just completely loaded with features that are very useful. And Tucker, I'm hoping that they will get you a new email somehow to get this thing. And I apologize, and they're going to extend your trial if that's what you're on, because you haven't gotten it yet. But if you guys haven't gotten this on a demo or haven't gotten the upgrade emails, please send emails into me or TFNN. I want to go to gold really quick. There's gold. Yeah, I mean, these arrows, 54 straight 240-minute bars, unadulterated, no break in a 240-minute profile trend. We're getting the arrows in the 60-minute this weekend, so then you'll have even short term. But that's what that means. And now you just don't have any green shoots in this. I mean, there's zero reasons to even pick a bottom here, to try to pick a battle. Just looking at the profiles, and here's the landscape view. Something really cool in here I didn't mention in the webinar. Here's your dashboard. You can add whatever instruments you want into this dashboard right here, different ETFs, what have you. But also when you're doing filters, for instance, downtrend resistance, you can also throw in more exchanges here. So if I want to see the Shanghai in the filter, look how fast this is. It's incredible. So you can get on your global brokerage account and hammer it. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I had a question at the very end about the scanner, and let me go back to gold here. There we go. 54 arrow down. This is a really cool feature we put in, because a lot of times, you see these gray cells and, you see a number and, what's that doing for me? So eventually you will end up reading this thing kind of like the Matrix with numbers and colors, and you might not even need to reference charts. And this is a great example. So 2 weekly 15. So we know that below profiles are kind of by default clarified as, okay, we're changing tone, we're changing trend. 54 arrow down in the profile means, look at this. These are we've been in a defined downtrend for 54 bars off the 240s as far back as we go. And we go back pretty far. That number could get higher, like 99. I think we cap it out at 99. But just because it is gray and in the balanced area, we tell you that this particular time frame has been in a downtrend, and if it had been in an uptrend, we've been in the balanced area, it would have said, 54 bars going backwards. It would have had an up arrow. So we just give you a little bit more information so you can kind of, all right, even though I'm in the balanced area and I know the inflection points, I'm more than likely supposed to be selling resistance here just by this situation. And 1083 is that 240 unfair high right there. And that's very close to that 1086.87, that big number on the weekly. Peak D, we're going back more than likely to that area right there. That's where the last time we broke profiles on the upside. I've got to count these to make sure, but I'm, 10, yeah. I mean, we may have had a hiccup here. I mean, I don't think we did, though. I could count these. I could count them on the show, and we could spend a lot of time on it, and everybody could go get some coffee and donuts while I'm doing it. I'll actually do that on the break. How about that? Silver, man, sad. We've talked about staying away from this on the long side, and man, it just doesn't get any uglier than this, and it's actually on a relative strength basis weaker than gold. So this is probably the last thing you want to be nibbling on right now. Here's the profiles. Here's the situation on the scanner. I'm going to pull that up. Where is silver? Right there. Yeah, breaking down again, even on the 240s. Just an ugly, ugly situation. Okay. There was another question. Okay, great, JB. I saw some Putin messages in there. I think they ended up finding the guy, and he was in the guy who kind of supposedly masterminded this. They don't know if he masterminded it, but they had to take skin samples to identify him, and I guess that means he got blew into a zillion pieces. That's a shame. Just wanted to say that. That's a shame. Euro is all over the place this morning. Again, this is nothing you want to try to nibble on the long side. We closed below, we routed around, we came back up this morning into that 107.10 we talked about was the, new area to start picking battles on the short side. Here's the weekly. I'm just not even. I don't even want to pay attention to these shorter term time frames on the euro. I don't want to cloud my mind with what is the goal here. What's the eventual goal? Par. All right. Put your stops in. That's our ultimate goal. I think we got a caller, Robert from Buffalo.
Yes. Good morning, John.
Hey, how are you?
I'm fine. How are you?
Doing good. Is it getting cold up there yet?
Oh no, it's beautiful. Actually,
Great.
it was 1 year ago yesterday that we had 7 feet of snow, but the weather's been beautiful right now. Yeah, it's unbelievably,
that's great.
Unseasonably warm, as they say.
That's a great town.
It is. It's getting. Buffalo is really on fire right now. It's unbelievable. After 60 years of decay, we're finally coming alive. Yeah, it's, real estate prices are going sky high. Oh.
That's awesome.
Anyway, John,
Robert,
did you get an answer to your query?
Can you hold on for? We've got to go to break, and can you come back with us?
Sure.
Great,
Yeah.
Robert. Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances.
Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we've got Robert from Buffalo on. Robert, you still there?
Yes, I'm here, John. Thank you.
Great.
Yes.
What's on your mind?
Well, yesterday, listening to Tom, he was talking about Apple and Goldman Sachs. I believe he said put a price of about $160 a share on Apple, but in the meantime, they were selling off shares, and he was sort of miffed by that. So I'm wondering if you have an opinion on Apple. And also, did you get a query on your question about hogs? It is, John. It's bears make money, bulls make money, and pigs get slaughtered. If that's what you're looking for.
Robert, I couldn't think of that. I was blanking out. I told you it's early. Yeah. I haven't had the required amount of coffee this morning yet.
Okay.
Let's take a look at Apple for you.
Okay, thank you.
Yeah, you know, if you watch this show a lot, I'm not a big fan of placing these targets way above or way below because, you know, the markets change and things happen, and I just let the profiles kind of guide me through these things. So I didn't really catch Tom saying that, or whoever said that, 160 or something like that, when Tom was, or you got the target in your mind, and then Tom was talking about some selling. In my mind, you know, this is what's going on. Apple provided a really, really good breakdown around 124, that general area, and we caught that. I've got our weekly showing right now. We caught that just perfectly, and it was kind of not cooperating with the market, you know, relative strength trading, all that kind of stuff. We came down, and then, you know, that one morning there was some bids out there around 90, 92, which I couldn't believe.
Oh, wow.
Which is like a 10% haircut from the previous day, which was just astonishing. But we've gotten back in a very wide profile, a balanced area. And support right now, believe it or not, is a huge range between 104 and 128.29. And we're right in the middle of that at 117. It's actually, to some degree, underperforming the market in general right now. And on another time frame, it's a little bit better situation for traders. We've got 112 as support and 118.5 as resistance. All right. So in my opinion, for Apple, do I think it's going to 160? I got to tell you this. I just don't have any idea right now. All I know is, we've got some intermediate headwinds around 118.5. We've got some major support at 104 and intermediate support at 112 based on your time frames. I know I'm probably not telling you exactly what you want to hear right now, but do I think it's got a chance to shoot up to 160? You got to look. I always look at relative strength or relative weakness trading, and right now, Apple is underperforming the market. Now, it did lead it up yesterday a little bit. I mean, it's a major percentage of some of the the NASDAQ and the S&P. But right now, do I think there's better buys out there? This is always the question. Yes, in this case.
Sure.
So 160. I mean, this is the way we do it, Robert. I mean, you probably watched the show. I let the long-term trend kind of state the case. The breakouts on a long-term would be above 128.87. But you've got to kind of look at these lower time frames that are next to these long-term time frames if you're an investor, and let these dailies in this case regulate the trade up. And right now, you know what? It's just kind of meandering around within the long-term profiles, and really the intermediates haven't really given it a lot of scale up type look. So I think we're stuck here for a while in Apple.
Okay.
And I think you could probably put your money to better use doing something else. And if you're going to trade, this is a great range situation, in my opinion. You're going to have a lot of ups and downs with this, but it's kind of showing its hand right now, if you know what I mean.
Yeah. John, I enjoy listening to you very much, but I'm at a disadvantage. I'm a blind person, so when you talk about, as you can see, I don't know what you're talking about.
Okay.
So I just listen along and try to make the best of it.
Okay. Well,
and,
let me just tell you, from not being able to see this at all and not being able to see the scanner, Apple in a sense is in a range, and I think those numbers I pointed out are kind of trigger points to possibly do some trading. But you got minor support, intermediate support at 112. You got major support around 104 for Apple. Those are buy points, in my opinion, if you're thinking about accumulating Apple. And then 128, 129 are targets right now up top for this. So.
Okay. Well, that's good. That's good information for me. I appreciate that.
Yeah. Sorry I made it complicated.
No, that's done, and I'm glad you're back, and I hope you're feeling good. I hope for all the trials and tribulation you had gone through, I'm glad to hear you're back.
You know what? I appreciate that, Robert, and I had some great people taking care of me. John Duenas, namely, in the Philippines. He's a friend, and he's a general in some of the things that we got going on there, and can't say enough about that guy, but I really appreciate that.
So it wasn't in the slaw then, was it? It wasn't the slaw you ate, was it?
I don't think so. But it was very coincidental that the restaurant was named Ralph. I will say that.
I remember you saying one day, I think it was the slaw.
I love slaw. I hope it wasn't the slaw.
Oh, yeah. Okay. Well, thank you very much again, John. Take care.
Thank you, Robert. Thanks for calling me.
Okay, bye now.
Okay. Great example. Somebody pointed out in the den. Peak D, I'll explain that in just a second. Somebody was saying UTX, I think it was 20 some days on the scanner. I pulled it up. Let me just pull it up again. UTX. 22 weekly down arrow. So what it's saying is the most recent breach of profiles is on the downside. That was 20 2. I have a very short-term memory problem. Why? That was 22 weeks ago. And the cool thing is, this particular sort, downtrend resistance, and you guys hopefully are going to love this, weekly equals red and bar count's greater than 2. So that means that we're looking for not just a blip on the screen. We're looking for some staying power, I guess. Away down below profiles, daily equals top, previous bar equals gray. So that means we have to be within a daily profile when it's coming up into resistance, and previous bar is not equal to top. So we don't want that consolidation. We want something that's down, that's ratcheting up, and hopefully able to come off. That's one of the conditions. Weekly red, bar count 2, same situation there. But the thing I think that is kind of cool here is we've got weekly grays arrowed down. That means that we're just in a continuation pattern on the downside and looking for resistance or breakdowns to sell. Excuse me, we're looking for resistance in this particular sort. So weekly gray arrow down, daily equals top, previous bar equals gray, previous bar is not equal to top. So we're looking for situations that we're down. We're coming up into these inflection points. A couple other conditions down here. And I don't mind telling you this is not any secret sauce. We're just trying to help you guys to find opportunities. And if you were looking at this, last week, that would have been on the sort list for downtrend resistance, okay? Because it's got the gray area. We've been in a downtrend. We're coming up into an inflection point, and henceforth, UTX would have been on that list. Now, and actually, it may have been on that list yesterday, or excuse me, Tuesday, because we came right up. What was that? High 98.30. This inflection point is 98.46. Yep, it would have been on Tuesday on the sell resistance list on the sort. So, question: why is the daily arrow down in Apple profile 7 days? Okay, that's a great question, and we looked at this. Original said that Obama's estimate. Okay. Gotcha. Okay. All right. So why does it say that? Because the most recent break in profiles on the daily was on the downside, and we are in a continuation still. Even though this profile high is a little bit higher than even the previous profile low, see how these profiles scale down? It's basically saying, and who asked that question? Peak D. And we all know that's not his fault. His mother and father named him that from birth. Just kidding, Peak D. So the lower part of that profile, the previous profile, was a breach of that. So now we're in a continuation. By definition, we haven't breached any upper parts. And that's all we can do is right. That's a good word, legalize. We're trying to legalize the rules of the profiles, okay? I'm glad you said that. So that's why Apple has down arrow gray 7. And let's just pull that up. AAPL. God, I love this scanner. I'm very biased. There's that down arrow 7, even though we're within a new profile here. And there's those new inflection points we just talked about with Robert. 118.57 on top, 112.08 on the bottom. I'm going to cry. I love the scanner. Is anybody else crying out there? No. All right, so let's kind of go back in time a little bit here to what we were talking about initially. Dollar, we know the story there. 128's our targets. Shanghai still in go-go mode. Not a lot of reasons to start looking at that any other way than north right now. Nikkei we're going to pass on. I think that's kind of a waste of time. These treasuries. Still a big fan of the treasuries. Stops below 126.17, 18. If you guys are joining us late, targets up top 127.11 into 19. S&Ps, we want to kind of revisit this. Guys who are joining us late, shame on them. This is our situation. We've come a long way really, really quick. We got a big inflection point, 2088, 2089. We talked about the breakout above 63 yesterday or below 45. You kind of had to wait and see on those, even though we talked about a range on Tuesday. But right now, don't have any real leverage with the breaths or anything like that. We talked about, even on a short-term basis, let's just see if we can get some kind of breakage of profiles on our 60s below 2083. That is what I think the trade is right now. I think going long up here is, especially below 2088, 2089, is kind of scary. You might have some short-term trading opportunities for this thing to kind of spin around below that area. But again, you're trading against the long-term trend up, and until we start seeing some kind of rollovers here, at least even on the 60, if you notice the 60, the more I fight this little indicator, the more it etches a path in my brain that I should really be relying on this on a short-term basis and some of the inflection points to make some extra points, because I if you guys watch the show, I look at long-term inflection points a lot of times, and there's some great short-term trading opportunities based on 60-minute breath crossovers in our scanner. And this will kind of keep you on the right side on the short term. So for instance, right now, even on the short term, we haven't had the stocks open yet, so this is a little lacking in its calculation methods still, because remember, the breadths are a function of the underlying instruments. And for guys that don't watch this show that often, this is our daily 4-hour, gives you the numbers relative to the profiles, gives a net profile up or down, basically, based on the amount of stocks trading above profiles relative to stocks trading below. This is a Bloomberg brief that's going out this morning, actually. And I want you to kind of see what I talked about here. Guest column, John Logan, going out this morning to about 400 Bloomberg subscribers. Talked about the XLY. Talked about this is a little bit of a scary trade, not for the faint of heart. I'm looking at it as a long-term trend change. I can send this out to you guys if you'd like, and I'll see if Tommy can send it out. But it gives a little bit of an explanation. I added in our breadth indicators, XLY breadth that was relatively negative versus our long-term TAS breadth, which was turning positive. I mean, there's a lot of divergences setting up here for this particular ETF, even though we're almost outperforming lately. But if you'll notice, higher highs, lower highs on Navigator. Even this trend up, it was kind of like the trend in Navigator, higher highs. And we've also got some changes in breadth situation in this ETF on a relative weakness basis relative to the S&P breadth. So it's a quick read. Just want to show it to you. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. S&P's daily, just want to point this out. We're finishing up with it. It's shocking sometimes how accurate these profiles actually are. This is a target situation here. After that breakout of 63, let me just revisit that. Here was that, again, the range 45.63, boom. Pretty much had to buy that. Breath started turning all in your favor at that stage. But, where do we kind of take off some weight here? That new profile, again, was in force. We reached a high this morning of 2089.25, and guess where the unfair high is? 2089. So that worked out well. The question is, what do you do with it now? I don't think you go long this morning. I think all the juice is kind of squeezed out of this for a little bit. The good news is you can place stops above 2089 based on your appetite for risk. And we've got some kind of first-time little breakages here on a short term of profiles since that really March forward started happening around 45 and didn't look back yesterday or the day before, actually. So let me read the see, DAX. Let's talk about the DAX. Yes. Since these markets kind of look to the U.S. for leadership, especially the DAX a lot of times, and again, on a relative strength basis, has it rallied more? Yes. we may have a little bit of a pullback on the DAX today. You got to keep your eyes on the S&Ps, and you got to keep your eye on that 2089 area if you guys are day trading. We talked about the DAX possibly relaxing into that 10,950 into 11,000 today. That's kind of best case scenario, hopes and dreams. That's best case scenario for the shorts, I think, right now. I mean, I don't know how big of a factor the world is being happy about blowing terrorists into tiny bits, which is extremely exciting to me, but that may be affecting these markets too. You never know. You never know. Beans, want to hit this one. Jan Beans. I know this thing's been beaten to crap here. 871 stops above. I think this is still headed lower. 825, we talked about targets for beans way back, and that was, way back actually. $10, $10.50 a bushel. That's where I still think this thing's headed. Okay. Got about a minute left, guys. I don't want to pull that up. I want to pull up Amazon. If we can get our charts to load here. Come on, e-signal. It's never my fault. It's always another company. Amazon. God. Obviously in the XLY. This thing, no serious indication. See how this thing finds support every single time? Doesn't break profiles, the regulation of the long-term trade up. Somebody said I could be on Hillary Clinton's server. That would definitely slow this thing down. Here's the 240s. Somebody was asking about, is this thing gone too far? No, it doesn't. Things on their highs go higher. We haven't had any breakage of profiles on the daily. The weekly's just screaming, do not short me yet. Guys, stay tuned for Larry. You will thoroughly enjoy listening to him and all the hosts on TFNN, Steve, David, Basil, Tom, and Daryl Martin. Stay tuned, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.